All right, in this video, I am going to cover accounting for bonds when we issue at par. And I have a ring light now. Like I am definitely moving down the scale of, I don't know, professional lectures. I'm going to be so good in like 5 years from now. Anyway, all right, so accounting for bonds, we're issuing it at par, okay? So let's look at some of the assumptions. So in this particular situation, all right, on December 31st, 2021, a company issued the following bonds. So the par value of the bond is 100,000. I do not like the way that that says. I would think of it as face value, okay? The face value of the bond is 100,000 and we are issuing it at par, which means the stated rate and the market rate are the same, right? So the market rate is also 8%. That's the way that I would think about this, right? We're going to pay interest semi-annually, all right? So we'll pay on June 30th and then again on 12/31. And then the maturity date is 2 years from now, okay? So when we issue a bond at par, meaning we issue it at face value, the amount of cash that we're going to get is 100,000, the face value of the bond, and we create a liability called bonds payable, right? Liabilities are credits, and that's why we are crediting bonds payable. And we credit bonds payable for the face value, all right? Then we can then we can pay interest. And when we pay interest when we issue it at par, it's pretty straightforward, okay? The journal entry is going to be interest, and bond interest expense will be the face value, and that was 100,000, times the stated rate, right? The rate that the bond is at. And again, it was 8%, but we're paying semi-annually. So the stated rate twice a year is 4%, and therefore 4,000. Interest expense is obviously an expense, and it lowers my equity. If I want to lower equity, I would do it with a debit. And then I would credit cash, okay? Cash for 4,000. Cash for 4,000. And then when we reach maturity, right? So let me back up. We would do this journal entry on December 31st, 2022. We would do it again on June 30th, 2023. We would do it again December 31st, 2023. And then when we were ready to retire the bond or give the investor their money back, right? Remember, we originally had that bond payable at issuance and it was 100,000. And now we are going to give somebody their money back. So we would credit cash for 100,000. And then to lower this liability to zero, I'm going to debit my bond payable. That is issuing bonds at par, right?